Now today we are going ahead for accounting rules. But what we have done up to this lecture, just try to understand. Chapter number 2, dual effect of transactions and types of account. So up to this lecture we have seen economic transaction, non-economic transaction. If it's an economic transaction, then we can give effect of it in the accounts. If it is non-economic transaction, we cannot give effect in the account. Next, if there is economic transaction, then we are bifurcating it as per the accounts. So, is it related to personal, impersonal, real or nominal? That we have seen in last lectures. If you can bifurcate it very well, then your work becomes very easy to apply your rule. And I know one thing more. What is Kamal sir's step? First step, check it. Is it real account? If yes, then apply that too. Second, check it. Is it nominal account? If yes, then apply it. And if here both rules are applied, then don't check personal account. If both rules are not applied, then go to third account, third step, and that is personal account. So in personal account, we are applying last. First we are applying this, then we are applying this, third we are applying this. Now which are the rules for debit and credit? Because our chapter name is dual effect. Now dual effect means what? Two effects. One effect is debit, second effect is credit. So to which account we are debiting and to which account we are crediting, and which are the rule applicable? That rule we are doing in this lecture, and on that basis we are doing transactions. Simple. So first what you have to do, you have to think, is it real account? Is it nominal? Is it personal? Real is related to assets and goods. Nominal is related to expense and income, and personal is related to personal. Simple. Person, artificial person, legal artificial person, you can say. And then after applying, now think, if we are talking about goods and asset, then think, in business we are purchasing goods, then selling goods. In business we are purchasing asset and using it, after using, selling it. That's it. This is the situation related to assets and goods. It means I can say goods comes in and goods goes out. This is the real situation. Again I am repeating. Goods comes in and goods goes out. This is only the situation for goods and asset. So on that basis, we are applying rule of debit and credit. If comes in, then debited. If goes out, then credited. So if I am purchasing goods, then comes in. Anyway, goods comes in or asset comes in, it is debited. And if goes out, anyway it goes out, then we are crediting. So this is the important one. Even asset means cash. Cash is our asset. If cash comes in, we are debiting it. If cash goes out, we are crediting it. So whenever we are applying rule, don't worry. Just think. We are talking about asset and goods. An asset can be come or goes out. Two possibilities are there. So comes in, debited, goes out, credited. Apply first this rule only. First rule applicable. If debit and credit done in first real account only, then don't check nominal account. Never check nominal account. If one thing is debited, second not credited, then check is it nominal, and if it is credited in nominal account as per nominal account, then don't check personal account. This is steps given by me only. Comes from directly. So, what is the debit credit rule of real? Comes in debit, goes out credit. That's it. Going ahead. Then apply nominal. Nominal means expense and income. Two possibilities are there. For this purpose, I am explaining you about pocket money. Try to remember my first lecture. In first lecture, pocket money presentation. Left side, right side. Left side we have written expenses, right side we have written income. Left side debit, right side credit, expense loss debit, income gain credit. So in first lecture itself it is written debit side expense, credit side income, debit side loss, credit side gain. So left side, debit side we are writing expenses, right side we are writing income. So this is the rule for nominal account. So again, first rule for real account. Comes in, debited, goes out, credited. Comes in, debited, goes out, credited. Expense loss, debited, income gain, credited. And if we are talking about personal account, then think which person, which type of transactions we are doing. That person receiving or that person giving. Only two possibilities are there. That person is receiving something from me or that person giving something from me. So there is only two relations, receiver or giver. That person may be receiver, that person may be giver. If receiver, then debit. If giver, then credit. But apply this rule at last. First, you need to apply first real, second nominal, and if this both is not applicable for debit and credit, then and then only apply this rule. So this is the very important one. Rules to do accountancy. And if this concept is clear, then up to any level of account, you can do very easily accounting. So, again I am repeating one thing and then doing many transactions up to end of the lecture. Don't worry. So, going ahead. Real related to asset goods, asset comes in or goes out. So, comes in debit, goes out credit. Going ahead, nominal account, that is expense or income. So expense loss debited, income gain credited. This is the rule for nominal account. Personal, receiver or giver. Receiver debit, giver credit. So in this way, these rules are applicable as per different transactions. And for that you have a knowledge about cash transaction or credit transactions. That is also important one. When we can say it is a cash transaction, cash return, paid, received, this information given, it means cash transaction. If nothing is given, no cash information, no person information, then also it is cash. If nothing is given and personal information is given, then it's a credit transaction. That is also done in last lectures. So at that time we have to think cash comes in or goes out, because it's a first time. If no cash transaction, credit transaction, then don't think about this asset. Then think about person. Now going ahead and doing different transactions. I am reading and explaining you all the things. Ranchod commenced business with capital of rupees 50,000. Ranchod commenced business with capital of rupees 50,000. Now think, Ranchod is owner and he started some business. Ranchod bring capital to business, and we are writing business account, not Ranchod account. So consider only business. Business is taking capital and owner of business giving capital. Now think, 50,000 rupees comes in the business. What comes in? 50,000 rupees comes in the business. Who is giving this 50,000 rupees? Ranchod, owner of the business, giving 50,000 rupees to the business. And we are writing account of business only. We are talking about business only. So as a business, cash comes in. Now think, cash is what? Asset. Comes in means debit. So what I have to write? Cash account debit 50,000 rupees. In this way, we have to apply our rules. So cash comes in, cash account debit. Now think, anything goes out? No sir, Ranchod giving, then nothing goes out. Cash comes in, that is okay. Nothing goes out, so nothing credited as per real account rule. Now think, anything expense? No sir, cash comes in. What is the expense? Nothing. Is it income? No sir, it is not an income. What is income actually? What we are earning from market. If person who is an owner, he is giving something, is it not it is not an income for me. So no income. So don't apply this rule. So nominal account rule cannot be applied. Now think, personal account. Receiver or giver? Sir, owner is a giver. Yes, giver. Giver means credit. So think, what is debited? Because always first we have to write debit, then we have to write credit as per accounting rule. First think about debit, then think about credit. But we are thinking in these steps only and writing first debit and then credit. What we are thinking, other person don't know. So do as per these steps without any hesitation. So first we have applied comes in. Yes sir, cash comes in. Cash is my asset. So cash account debited. Nothing applied. Here giver. Owner is a giver, and honor whatever giving is called capital. So I have to write Ranchod capital account credited. Ranchod capital account credited. So in this way, I had applied cash account debited, Ranchod capital account credited, because Ranchod is owner of the business. It's my first transaction. First transaction. During next transaction, 20,000 rupees deposited with Bank of Baroda. Now think again. I am going to bank. I am a business. Going to bank and depositing amount in Bank of Baroda. Now think, anything comes in? So nothing comes in. Anything goes out? Yes, sir. Goes up. What goes up? Cash. I am giving cash to Bank of Baroda. So cash goes out. Cash account credited because asset. So cash account credit. It is fixed. Now credit amount fixed. Credit thing fixed. Cash account credit. Now here debit rule is not applicable. So see here. Is it my expense? Sir, how expense? It is in my account. So it is not expense. If it is in others account, then it may be expense. But here, deposited in my account. Bank of Baroda, my account. So it is not expense. Is it income? So how income? Deposited, then not income. Now apply hard rule. Receiver, Bank of Baroda receiver or giver. So simple. I am depositing. It means Bank of Baroda receiving. Bank of Baroda receiving. Receiving means receiver. Yes, receiver account debit. So Bank of Baroda account debit. So first decided cash account credit. Second decided Bank of Baroda debited. But as per the rule, we have to write first debit entry, then credit entry. So first we are writing Bank of Baroda account debited and credit entry cash account credited. That's it. So in this way, we can write debit and credit entry. It's by dual effect, two effect. One entry is debit, second entry is credit. That is very, very important one. Going ahead, third transaction. Goods of rupees 2,000 purchased on cash. Goods of rupees 2,000 purchased on cash. Now, goods purchase on cash. It means I am purchasing goods and giving money. Simple thing. I am purchasing goods and giving money. Now, most important thing. Think, apply this rule first. Anything comes in? Comes in. Yes. Goods purchase. Goods comes in. So goods account debit. But remember one thing. For goods, we are using words purchase, sales, purchase return, sales return. These four words we are using for goods related transactions. Purchase, for goods related transactions we are using purchase, sales, purchase return, sales return. These four words we are using for goods related transactions. Now here goods purchase. So we can use purchase account because it is related to goods. If asset purchase, then I cannot write purchase account. Suppose I am purchasing AC, purchase AC for 50,000 on cash. Then I am writing AC account, not purchase account, because it is not goods. It is for my own use purpose. It is not for sale. So whenever goods related information is given, then and then you can use sell, purchase, sales return, purchase return. Here, goods purchase and goods purchase, it means goods comes in means debited, but purchase account debited. So purchase account debit, purchase account debit, it's fixed. Purchase account debit is fixed. Now think, anything goes out? Yes sir, goes out. What goes out? Money on cash. Means cash goes out. Now cash goes out means cash account credited. That's it. So we are not checking second step, we are not checking third step, because my transaction is completed here only. Debit and credit both done. Goods comes in, purchase account debited, cash goes out, cash account credited. That's it. So here my transaction is complete. What is debit and credit? Both done here. Going ahead, next transaction. Goods of rupees 6,000 sold to Radha. Goods of rupees 6,000 sold to Radha. Now think again. Goods sold to Radha. Is it cash transaction or credit transaction? Think. Sir, no clarification given. If no clarification given, then apply your mind. Is there name given? Yes sir, name given Radha. If name given, then credit. If name also not given, then cash transaction. So here it's a credit transaction. First I have decided it's a credit transaction. So first sold to Radha. Now think, anything comes in, cash comes in? No sir, credit transaction, then how cash comes in? So nothing comes in. So nothing is debited as per real account rule. Anything goes out? Sir, goods sold. It means it goes out. Goes out means what? Credited. So goods credited? No. For goods, we are using words purchase, sales, purchase return, sales return. Here, which is the situation? What is the situation? Sir, sales. Sales account credit. Goes out, sales account credited. So sales account credit. So the debit don't know, but sales is credited. That is fixed. So see here, next step. Is it my expense? Sir, it is not an expense. It's an expense, but not an expense. Sold. For sold goods, we can pay selling expenses. But here no information given about expenses. So not writing it. Is it income? Yes sir, income. Income credited. But this is the income of sales. So sales credited. Sales already credited. So don't write other income. Because this is considered only for other type of income, other type of expenses. Purchase, sale related. Purchase and sales expense. Purchase expense, sales expense. That related things is not considered here. If we are purchasing that, then it is an expense, but write purchase account debit. If we are selling it, sales account credit. It's my income, but it is not considered here because it is related to goods first. So Cancel it. Now third, always apply. If this 2 is not applied, then this is applied. Now I am selling goods. I am selling goods means somebody is receiver. Radha receiver. Receiver account debit. Now think. First we have to write debit, then we have to write credit. So write Radha account debit. Sales account credit. That's it. So in this way we can apply this all the rules. Now in live session we are discussing with you and giving you example, giving you questions and then asking many answers from you. And this lecture maybe take more time. And related to this lecture, we are taking many lectures on live. So see you in the live lecture. But be prepared with this rules and regulations. Bye-bye.